Yeah, I think stablecoins are just the largest and most interesting growth area in all of crypto right now. You have about 245, 250 billion in outstanding supply now across all of the stablecoins. And I think it's a meme we kind of use pretty actively and pretty liberally on Twitter and elsewhere. This kind of trillions thing that's rooted in a kind of in very high conviction that eventually you will have trillions in an outstanding stablecoin supply.
Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez, and today I am very, very happy to be joined by Paul Faeks from Plasma. He is the founder or co-founder, Paul?
Founder, co-founder, there's a bunch of people involved, but founder works.
Nice. Okay. Founder of Plasma. And Plasma is a purpose-built blockchain specifically engineered for stablecoins. And I really am curious about this because it seems like this is the first of its kind. I'm not aware of any other project that is focused specifically on stablecoins the way Plasma is doing. Do you want to give people like a high-level overview of what the project is for those who aren't familiar?
Sure, absolutely. To be fair, like there's been a couple. Now I think that there's probably going to be 100 plus more of
Okay.
these stablecoin chains. None of them really kind of live and truly existing. But there's a bunch of sharp teams who kind of work on the kind of basically adjacent kind of overlap between chain and stablecoins. I think you kind of summarized it extremely well. Plasma is a stablecoin kind of focused on blockchain. You can just make very different choices if you only focus on how can we be like the best product for stablecoins, and that involves kind of both choices you can make on the architecture side of things in terms of like VM and consensus and like protocol level features that are kind of specifically built for stablecoins, but then also kind of on the strategic go-to-market, what you focus on, and where you spend your time on. You have quite a bit of leeway to kind of really hone in on what I think is by far the number one use case for blockchains. It's kind of interesting, like how if you look at the data of like how much block space really is stablecoin related, and it used to be like a tiny percentage. It's way over half now, and so we very much view stablecoins as kind of the one use case for a blockchain, which is just permissionlessly moving currency and value around. I think is really an incredible unlock, basically that is only possible on a chain.
Yeah, it's crazy the way that stablecoins have kind of taken over the crypto market, because I remember like when I first got into crypto, all the exchanges had like Bitcoin against whatever altcoin you were trading, right? They were all Bitcoin pairs. And now I think like predominantly it's USDT or another stable coin on most exchanges. And it's actually kind of hard to find like Bitcoin pairs now.
Yeah, I mean, most of the trading volume on that uses all of the Bitfinex main pairs like USDT. Like all of that is always kind of crossed against USDT.
Yeah. So before we get into Plasma, like I want to get into the choices that you guys made for the architecture and how you're taking it to market, as you mentioned. But like, what potential do you personally see for stablecoins like over the next 5 years?
Yeah, I think stablecoins are just the largest and most interesting growth area in all of crypto right now. You have about 245, 250 billion in outstanding supply now across all of the stablecoins. And I think it's a meme we kind of use pretty actively and pretty liberally on Twitter and elsewhere. This kind of trillions thing that's rooted in a kind of in very high conviction that eventually you will have trillions in an outstanding stablecoin supply. And I think really like if you think about like what is the kind of TAM for stablecoins, I think it's a good chunk of just cross-border commerce, really, whenever you move kind of value from A to B, especially if you do it cross borders. Stablecoins are just the superior way to achieve that, because they're faster, they're cheaper, they're more efficient, they're more transparent, and I think that is obviously kind of an incredible unlock for the world, and so. I think this kind of growth that you've seen on the stablecoin side of things in the last couple of years, I think that only accelerates.
With Plasma, like you mentioned that you guys specifically designed the blockchain for stablecoins, like, I guess, how does the architecture differ from like a traditional blockchain? Are you guys like similar to like Cosmos or like Ethereum? Like, can you kind of give us an overview of how the chain is designed?
Sure, absolutely. So we use Ref as kind of our baseline on the VM side of things, and then so that means we're fully EVM compatible. We've
Okay.
customized that quite a bit, but Ref is kind of fantastic to kind of use as a baseline. It's very fast. It's very easy to integrate, and so we're building on top of that. We've built our fully owned consensus that is fast hot stuff based on kind of BFT subcategory, and have kind of very much kind of built that around the stablecoin use case, where on one hand we'll have gasless transfers of USDT kind of enshrined on the protocol level, and we're working on privacy features, and there's kind of a long list of kind of very kind of stablecoin specific and features that we've been spending a lot of time on.
And what stage of development are you guys in right now? Are you still like on testnet, or like how soon do you expect to go live?
Yeah, we have a testnet out. We have not shared this publicly. It's mostly for kind of partners to onboard and then start testing. We'll likely kind of have that be public very soon as well. It might be public when this podcast comes out, actually. So this might be outdated info by the time this is live. And we're gearing up to launch in the next probably 2 to 3 months on mainnet.
Okay. And what's your vision like for Plasma? Do you see it more for like institutions and institutional use case, or do you see it like as a retail focused blockchain?
I think in the end, a lot of things in crypto and specifically blockchains are kind of inevitably B2B to some extent, where no one really interacts with kind of chains really like directly. Like you always have some sort of kind of piece of infrastructure in between you and a chain, even as like an end consumer, right? But like you would use MetaMask, or you would use Rabbi, or you send money from your Robinhood account somewhere, right? And like that happens on a blockchain. And so a lot of the actual kind of blockchain like activity is in the end kind of B2B mediated, and so very focused on those kind of key, basically central nodes of stablecoin flow. And I think for us, we can be the best chain for moving stablecoins from A to B. And the very clear ambition is to just be the best product for moving specifically USD based stablecoins are just the most interesting and the largest right now from A to B.
Okay. And then like what choices or like trade-offs have you guys made to like kind of optimize it specifically for stablecoins?
Sure, absolutely. So the entire consensus is built around that, and I mean every chain is fast and cheap, right? And so no one really wins by being fast and cheap. I think it's kind of a necessary but not sufficient component to like even have like a chance of like being in contention. In the end, like we have these like stablecoin specific features on the chain level, such as kind of the gasless USDT transfers and then privacy enabling features and all of that. You just have a lot of kind of product leeway actually especially if you control consensus and VM. You can do a lot more than what you could do on like just like a kind of plain vanilla ETH L2, for example, where you just have like much more kind of restricted set of choices you can truly make. And so we're building this out. I think for us also like the stack around the chain matters a lot, where especially if you're kind of focused on the payments angle and kind of really attracting like the true kind of basically the net new use cases of stablecoins too, right? But I think that's kind of changing quite a bit, where you see kind of institutional interest and adoption, right? You see commodities trades being settled on chain, and then you see kind of true like these very large notional amount transfers. I think a good chunk of that is going to end up being stablecoin based because it's just so obvious and so much better for everyone. And that requires a lot of infrastructure around just like the blockchain itself, right? Where you need the kind of orchestration stack around that, you need reporting tools, and like you have this kind of entire kind of basically payment stack that is around the chain. And we're opinionated on what that looks like, and work with a bunch of the larger players in that space. And I think you need like the holistic experience of using the chain to be the best. And I think you don't get there with just the chain, but like this is very much, especially like payments, right, which is such a like network effect based endeavor to an extent, where like payment rails that like 2 people accept, but like 400 people that you want to like do business with don't, is like fundamentally worthless, right? And so I think you need to be as omnipresent as possible, and then you need like to be very tightly integrated into existing processes everywhere.
Okay. And then as far as the chain goes, like it's a proof of stake chain, I assume?
Yes.
Okay. And then like who are the staking like validator nodes? Are they like partners that you guys are working with, or is it like anyone can run like a validator?
We will, it's likely going to be a staged rollout, but we'll pretty quickly move to a system where everyone can run a node and everyone can be a validator. I think this needs to be permissionless and open and usable for anyone who wants to, right? And so and we're very focused on like making this kind of as broadly usable as possible, and everyone can participate.
Like, I know you guys are in a pretty early stage right now, but since it's like an EVM compatible chain, you guys can do like pretty much any kind of smart contract or like DeFi. Do you guys have plans for anything like that, like for Plasma, like stablecoin based smart contracts or DeFi applications?
Yeah, 100%. I mean, we work with most of the kind of blue chip ecosystem on that side of things, and so you like need that very robust infrastructure as kind of a base layer, basically. And so very keen to kind of have as much kind of real, organic, sustainable kind of stablecoin activity on the chain. And that inevitably includes having robust lending infrastructure. It includes having kind of robust kind of stable to stable swap infrastructure, and then kind of ways to like actually utilize stablecoins. And then so we spend a lot of time kind of building that ecosystem out.
Nice. And then are you guys planning on being interactive with other blockchains within like the Web3 multi-chain ecosystem? I know like there's bridges from, you know, like Ethereum to AVAX or BNB or like one of these other chains that shares the EVM compatibility. Do you guys have any plans to kind of bridge to these other chains in the ecosystem?
Yeah, 100%. I mean, we work very closely with our good friends at Layer Zero. They're fantastic, and we use that as kind of our main bridge infrastructure. And then we also work with a bunch of other chains. I think like you need it to be very easy to like move money in and out, basically, for those to have value. And so we're very focused on kind of having also an ecosystem that like provides both pathways in and then pathways out as well. Ideally only in, but you know, it has to go both ways.
Yeah. As far as like stablecoin support, like you mentioned that you're focused mostly on USD based stablecoins, but will you like at some point add support for like, I don't know, like a euro based stablecoin or like, you know, one of these other regional currencies that we see people trying to make stablecoins out of?
100%. I mean, the chain is fully permissionless, so anyone can deploy anything. We're somewhat biased towards USDT, and USDT is kind of the one apex stablecoin, especially if you look at like real usage, where a lot of the other stablecoins are just relatively stale and just sitting around. I think USDT is where like the bulk of the actual kind of true, real, organic activity is happening. So we're quite focused on that. In the end, we want a vibrant ecosystem, right? And so anyone can deploy stablecoins. We work with a bunch of the other large stablecoins. We don't work with the second largest stablecoin, but basically with everyone else.
Okay. And then like, I guess over the last year, I want to say, we've seen governments kind of change their perspective on stablecoins and kind of embrace them and start talking about regulations and stuff like that. And I think Europe was the first to like big jurisdiction to put in MiCA, which regulates stablecoins. Like, what impact do you see regulations that may be coming into effect like over the next couple of years having on like stablecoins in general?
Yeah, I think they have a massive effect, right? I mean, you saw this with Mika in Europe, which I'm not the biggest fan of, and I think is mostly a negative. Actually, even like for end consumers, I think it's a negative. I think it makes stablecoins that are Mika compliant less safe because you're forced into holding a lot of just basically uncollateralized cash in bank accounts, which is way less safe than just holding U.S. Treasuries, for example. And there's a reason why USDT kind of very kind of actively chose not to be compliant under Mika, which I think is the right choice. It's going to be interesting in the U.S. now specifically, right, where you have the Genius bill in the Senate right now, and then you have the stable bill probably maybe coming at some point as well. I think in the end you want stablecoins to be regulated or at least you want some like rule set around them. I think the Mika route of like being incredibly restrictive, I think is both stifling to innovation and bad for end consumers. But it's looking pretty positive generally, right? And I think in general, like the regulatory climate has eased quite a bit.
Okay, like I'm curious, like in regards to Mika, where now like they have specific like European market stablecoins, like doesn't that kind of create a huge disadvantage, like in terms of using them as like a global tool? Like, for instance, USDT, you can send it to anyone anywhere on earth, like it doesn't matter what country they're in. But like these European stablecoins, like if they're only like primarily active within like a European jurisdiction, how does that impact like if they want to send like a payment to like Asia or, you know, North America, for instance?
I mean, in the end, anyone can accept any kind of means of payment that they want. Europe doesn't matter in like the global market for stablecoins. Really, if you look at like the actual data of like how much outstanding supply the Euro stablecoins have, and then kind of how large the kind of USD based comparisons are, you have a staggering difference. But I think that may change, right? And I think like you will have like local currency stablecoins that are going to be large and used, and I think you will have an ecosystem of stablecoins, of course. And so I don't know. It's tough to predict like how that plays out. And really, I think the Mika approach is the in classic European fashion, and you see this in other ways, right? Like you have the AI regulations in Europe that make it very hard to actually be competitive globally, and you have the same in Mika. And so Europe doesn't have a fantastic track record of like being a supporter of their own innovation industry, basically. And as a European, like I would like for things to be very different. I think they're probably changing slowly. I don't know if they change quickly enough, but let's see. I mean, it's going to be a global arms race to like have stablecoins kind of be primarily in your currency. And I think like it's actually a key kind of strategic benefit for the US to have such a like large outstanding supply of USD based stablecoins, because that it's obviously kind of a buying pressure on US debt, right? And so it's in everyone's interest to have a larger outstanding supply of USD based stablecoins in the US. I think that's actually kind of a key strategic benefit for everyone.
Yeah, I agree. I don't want to keep like pounding on Europe, but Europe later this year is supposed to introduce like a digital euro. And I know like other central banks, like 80% of central banks around the world are also working on like CBDCs or like digital local currencies. How do you kind of see this playing out with these CBDC projects or like digital cash projects from like a government, and like the interplay, I guess, between stablecoins?
Yeah, I hate them for the most part. I think they're like antithetical to everything that crypto stands for, which is freedom, probably a bit of kind of independence from government, and I think it's kind of it's a very like 1984 type thought to kind of have something in my wallet that like can be like surveilled and frozen at any time, and to kind of have that be like a we have a like very well-functioning traditional banking system, and what I'm saying isn't that stablecoins shouldn't be regulated and should be like a completely free market. I think that's also kind of a naive position, but I have not seen a proposal for a central bank digital currency that I didn't deeply dislike.
Okay, and like I guess with stablecoins being like like the next level, I guess the step forward in terms of like sending liquidity around the world, like what kind of institutional interest have you guys seen like in plasma?
I think it's quite a bit of institutional interest, and I mean we work with a couple of banks. We work with one of the larger banks doing a lot of the international shipping flows, and they're keen to kind of move a lot of that to stablecoin based rails. And I think in general, as always, like I think on the institutional side, things are very much kind of slowly and then all at once. I think like this will probably reach a tipping point, but like it's still somewhat small right now. Like you don't see insane volumes on the institutional side, but you kind of see the like exponential growth curve at the beginning, basically. And I think like I don't know if you know these like hockey stick growth type.
Yeah.
Like it looks really small, and then it explodes. And I think it probably looks very similar for kind of stablecoin usage on the institutional side. I think we're just kind of very close to this inflection point.
Do you think we'll get to a point where like most like international transfers of money are stablecoin based or on stablecoin rails?
I think most is going to take a lot of time to be very realistic, and it's a bit of a we had one in one of our fundraising decks as a bit of a joke. We had this like the TAM is global GDP, and that's obviously like semi true, but like it's a good joke, but like it's not a very useful thing to say. It's tough to predict. I mean, you will have trillions moving on chain and then being transacted in stable coins. The majority is likely going to take many years, where I think like things just move slowly, right? And like even if you have like if you look at like the proliferation of the internet, for example, that also took ages, right? And so even if it's like the clearly superior technology, I don't think that means that like everything happens immediately.
Yeah, it's been like 50 years, and I think only like half the people on Earth still use the internet.
Yeah, which is staggering, right? And
yeah.
So
yeah, okay. And then like which regions are most exciting to you for stablecoin adoption? I know like Latin America, Asia, Africa, like a lot of these places where the local currency may not be so stable, people are adopting them. Like which region like has the most potential in your perspective?
Yeah, I mean, if you look at the data, it's mostly just basically anything that isn't the US and in Europe is where like the bulk of the actual kind of, especially on the consumer side, the activity happens. And so that's also where we are very focused. So South America is very interesting. Turkey is quite interesting. Large parts of Asia are very interesting. Africa is still somewhat small, but I think growing extremely well. And so I think that's also going to be pretty relevant very soon. And so I think you have a lot of especially as you said, I think like wherever you have like not fully stable financial systems, which is actually a surprising share of the world, really. I think that is where stablecoins have the kind of greatest immediate value.
Yeah, I mean, from my like own anecdotal experience here in Latin America, I know a lot of people that work like for companies in Europe or the US and receive like their wages in stable coins. And there's like now like fintech apps where they have like stablecoin integrations, you know, with like a debit card
Which
or
is
whatever.
really
So
cool to see. I mean, I think that is like that's a genuine like a genuine good for society. I think is like having cheap and easy access to USD and having the ability to kind of save in USD and not in your local currency. I think is a genuine good for everyone.
do you see any issues arising from like emerging economies and like the KYC barriers to entry, like for financial inclusion?
Maybe potentially. I mean, I think you always have like on and off ramps being highly regulated, and having a very very kind of robust KYC checks, which I think is net a good idea basically, and so think you just need to make sure that stablecoins can fit into compliant processes. Basically, I think like Tether specifically is very good at that, and you see incredible usage in highly regulated environments, and so again, in the end, a lot of that isn't really on the stablecoin itself, but like all of the infrastructure around that, right? That just kind of needs to be compliant, obviously.
Assuming the Genius bill passes in the United States and we see like big banks like, I don't know, like Citibank or you know, Bank of America introduce their own stable coins, do you think that will have a negative impact on decentralized stable coins like USDT?
I don't think so. I think most of those are way more competitive with USDC than with USDT, really. I think like stablecoins aren't like one like monolithic product, right? It's very much kind of way different products that kind of get put into one category. USDC is very much the kind of domestic US European product, and then USDT is kind of the digital euro dollar product. And Fidelity is working on a stablecoin. You see that Robinhood is probably going to launch their own stablecoin. You see Franklin Templeton, VanEck, like all of those very large institutions are kind of very seriously looking at stablecoins at least. And I think some of that will work, some of it won't. I don't really want to live in a world where like you have 800 different versions of the dollar, and so I think it's going to be tough. Like you kind of just, you have such a like winner takes all effect, right? Where like the liquidity and the acceptance and like the network effects just kind of accrue to the one winner. And I think that one winner exists. I don't think that one winner changes, but it's still interesting and good to see that like that there's interest in it, and people are kind of working on things. I think like if any of this actually works, but let's see.
Yeah, well, I mean, like I agree with you to a certain extent, because like the fracturation of the market, like the reason USDT has been so dominant like in the stablecoin market is because it has that like first mover advantage. It was the first one, and you know it's developed like a huge network effect. And that's why I think that even though like USDC is like the second biggest one or whatever, it's still like very, very small in comparison and in usage, because everybody just goes with Tether because of the network effect.
Yeah, 100%. And why wouldn't you?
Yeah. So like I'm actually kind of skeptical about these, you know, like if Bank of America comes out with a stable coin, like why would you use that? Like I wouldn't want to use it, to be honest.
Same.
Yeah. Is there anything I haven't asked you about Plasma, Paul, that you feel is important for the audience to know about?
No, I think nothing directly. I think you covered it relatively well, and I've nothing to add really.
Okay, cool. Well, before I let you go, do you want to give out like the website and social media and stuff like that, so people that are interested in the project can keep tabs on it?
Absolutely. Yeah. Our website is plasma.to, and we are at Plasma FDN on Twitter. Quite easy to find.
Okay, cool. Amazing. Well, Paul, thank you so much for coming on the show and telling us, first of all, your perspective on the stablecoin market, and second, about your project that you're working on.
Thank you, Ricardo. Appreciate it. Thanks for having me.